Palisade have a long and successful track record of investing in mid-market private infrastructure. Why do you focus on this part of the market?
Well, Jude, there are probably three main reasons we like mid-market. Number one, entry valuations, right? So we can generally get into assets at a discount to the large cap market. And if we can get into a transaction at sort of 12, 15 times earnings rather than 25 to 30 times earnings, which are more widely publicised, you can just see the ability to generate value from the outset. So it's getting in at the right price is important. Value creation is really important. We can, within our portfolios, add more value by getting hands-on, wrapping our arms around these assets, getting more involved with management, influencing management more, and generating value that way. And thirdly, we have incumbency. And by that I mean, as one of the larger mid-market, more successful mid-market infrastructure investors in Australia, we've actually got a significant portfolio of assets that we can continue to add to, and that generates value in itself.
Now, can you provide an example of a portfolio holding that exemplifies the Palisade investment approach?
It's hard to pick favourites, but I'd say Sunshine Coast Airport stands out as one of our more recent acquisitions. When I say recent, we've had it in the portfolio for 8 years. It's an asset that we own 100% of. We've got a 99-year lease with the Sunshine Coast Regional Council. It's a classic example of us being able to really put value into an asset. We funded a $300 million runway extension, which enabled larger planes to come in. That enabled us to develop the route network with the airlines. And you see, when you work in an environment or an area that is one of the fastest growing in Australia, we've taken in the 7 to 8 years we've owned that airport, passenger numbers from sub 1 million to 2 million per annum. So you can see enormous growth potential simply working with your clients effectively, which is your airlines and passengers. And then there's ancillary things we've been able to do, even as simple as car parking or car rental, renegotiating lease agreements with car rental people, and a huge property bank. And that means we can diversify away from simply airlines and passengers.
Now, the big question on everyone's lips, what is the outlook for infrastructure in 2025?
I'm likening 2025 and let's see what happens beyond. A little to 2011, 2012 when capital started coming back into the market. It's a very good time to invest. There's a real demand, supply imbalance where supply of assets is high again. But if we think themes, we're talking digitisation, decarbonisation, right? That's common across the board. There's just different ways of approaching it. Decarbonisation, we have one of the larger renewable energy platforms in the country. And we're going to expand on that. We're going to be taking it from 1 gigawatt we currently have in our portfolio to 4 gigawatts over the next 5 years. So huge ambition there. And we've brought on a development team to help us in that regard, to actually get in earlier in the thing and generate better returns for the investor. So decarbonisation for sure, both here and in the US we're involved. Digitisation as a mid-market player, we're not going to get involved in these hyperscale, big-priced assets, but we're liking regional fibre, and we're developing a platform in the US, in the Northwest, where we're consolidating a number of fragmented businesses into one. And so we like regional fibre for the digital play. And we'll continue along our current portfolio. We've got a number of transport and transport-related logistics infrastructure assets. Airport space, regional airports, still some work to be done there. We can see portside assets as well, portside storage. We've got a large portfolio and we keep on building on that. And I think one of the big themes, and everybody knows it, is housing and housing affordability. And so we've got involved with Mission Australia as one of the community housing providers. And we're working with largely government-supported government revenue streams to build out social housing for the good of the community and the environment. Yeah.